o nosso próximo convidado internacional lidera discussões sobre o futuro do sistema financeiro e da inovação bancária em escala global. Vamos receber o Global Banking Lead da Accenture, Michael Abbott. Welcome.
Boa.
Bem-vindo.
Boa. Buongiorno. Bom dia. Sorry, that's it. It's the end. I tried. I'm going to disappoint you from here on out with my Portuguese. So thank you, everyone. Michael Abbott. I lead the global banking practice at Accenture. What I wanted to do today was walk you through a little bit of what we're seeing around the world. So we're going to do a big tour. We're going to talk a bunch about payments, but a lot of other things too. So with that in mind, let me just jump right into this. In this job, I've spent most of my life probably more on the other side of the table, running banks and running networks and that side of it. Helped build out Apple Pay and sold a company that is now Google Pay. And one of the things that's interesting in this role right now is you get to see what everyone is doing around the world and what they're thinking about. So what I'm going to try to share with you today is a little bit of a global perspective of what we're seeing banks, networks, issuers, acquirers around the world, what they're doing right now and the challenges they're facing and the strategies that they're thinking about. So there's a number of different topics here. We're going to talk a bunch about money. We're going to probably skip a little bit about the experience side of it, but the short version of that is every one of you that is in the banking side should ask your chatbot one question, which is, what's the interest rate on my account? And if it can't answer it, if it answers it just with a number, and it doesn't answer it with how can I help you, then you know what that's all about. The future of experience should look more like a branch manager. We're going to talk about agentic in the future of work, the high cost, the low cost in technology, skip a little bit of risk, and we're going to talk about the future of competition. Because I know the future of competition has been about fintechs. I don't think the future is fintechs. I don't think it's that. I think it's something very, very different, given what we're seeing out there. So with that in mind, let me jump in. First thing here, and I love this title, Dumb Money Gets Smarter. So I think the way we think about, store, and use money is going to change radically out there. And here's why. First, before we go forward, I want to take a step back. If you go back to the days of the Medici in Italy, when banking started, the movement of money was simple. You took money from one bank and you moved it to another. It was a physical movement of gold, right? It moved from one account to another. It moved from Florence to Milan. And by the way, when we took that concept and we brought it forward into the era of bonds and equities, we did the same thing. Many of you may not remember this, but we used to issue bonds and we used to issue shares. And when you traded a share, you had to physically give it to somebody else. Hence the T+2, T+3 that we've all inherited. It took time to physically move these things. And then what did we do? When we started to digitize all of this, we took all that history from the 1400s and we just digitized it. We moved things from bank A to bank B, or from account A to account B. Hence all the settlement pieces that are out there. Here's the thing about the future of payments and the future of equities, bonds, and everything else, and what's about to change, is that just imagine now the money doesn't move. It sits in one place, and now instead, that money, we all agree it sits here, it points to customer A, and then when you move it, it points to customer B. The money never moves again. And at first I thought, I'll be honest, yeah, this is just science fiction. Decentralized finance is just buzzword bingo. Wasn't really going to happen. I got to admit, I was wrong. When you look at what's going on with stable coins right now around the world, they have become effectively a global checking account. Now, initially, it started off with the crypto world, right? If you were trading crypto and you wanted to move your money out of crypto, you couldn't move it to a bank because of the regulations. So what happened? People created stable coins as the ability to move money and store it there. But very quickly, these things like Circle and Tether have turned into global telephone networks of money. You can move it everywhere around the world. to put that in perspective, there is $300 billion sitting on stablecoins out there right now. If you were to take stablecoins and you looked at them as a buyer of treasuries, they are the number 5 foreign buyer of U.S. treasuries right now. This thing is enormous, and it's moved way beyond buying and selling crypto into person-to-person payments. Got a little money laundering going on there at times too, but it's turned into a global network of money. It's literally a global checking account, and it's everywhere in the world. There's over 250 million people have wallets out there that can hold stable coins, right? And when you roll this forward, and this is what I find even more fascinating being here today, when you look at it from a Latin American perspective, I think it gets even more interesting, right? When you look at it globally, still crypto assets dominate that's out there. Stable coins only represent 30%. It is the opposite in Latin America. Stable coins are rapidly taking over. In fact, they're growing almost 100% a year and represent 60% of the transaction volume that's coming through that. So let's dive even a little bit deeper and look at it country by country right now. And I found this fascinating when we put this research together for this. You'll see Brazil is actually leading the way on this in terms of volume. And you can see the numbers in here. It's almost 60% now is sitting out there in terms of money movement off of stable coins. And you can see it across for Argentina, Mexico, Colombia, and Peru. But that's actually not the interesting part. The interesting part are these statistics, right? When you look at it, about 14% of Latin American payments now are coming in and out of the countries via stablecoins. But I want to draw your eyes to a couple of things here. One, the sheer size of that number that's coming in and out of Brazil. Brazil is leading the way in this in terms of making stablecoins an accepted method of payment. But I also, for any of the central bankers in the room today, I want to point you to the circle around Argentina, right? Because when you look at Argentina, there is over 200% of the normal money movement that's occurring in and out of Argentina is occurring now in stable coins outside of the banking system, right? This is outside of the banking system. When I talked about this with some people in Colombia a few weeks ago, they were saying this is the number one thing they're looking at in terms of how they think about the movement of money, is how it's going to change radically. And when you see this, look, right now, Brazil accounts for almost 51%, half of the crypto flows out there. It's growing over 100% a year right now. And that growth, when you dig underneath it, we don't have enough time today to go through all of it. It's not just consumer and what I showed you. There's an increasing amount of commercial money that's being moved through this out there. You've seen a number of deals that have been put out there. They're starting to become almost a dominant transaction layer for international payment movements. And you have the regulations moving in your favor to open this all up. So for all of you in this room who are looking at this right now, I would encourage you to look at this heavily. And here's why. All you have to do is take a look south down to Argentina and what's happened. And what you will see is if you're a gig economy worker down there, freelance worker, over half of the freelance workers in Argentina now are getting paid in US dollar stable coins. It is rapidly becoming a method of payment. And again, it is outside of the financial system, it's outside of the central bank, and it now represents almost 17% of Argentina's reserves. Again, for the central bankers, you're not going to be able to inflate your way out of these things anymore because there's a different way of moving money that's emerging out there. And I think the question for all the traditional players, that includes me, where I've been, is how are you going to integrate this in to the future? And here's the last thing I will leave you on stablecoins, which is, and this stunned me, it's 99% US dollars. There has been euros launched, other currencies, everything out there, but for some reason, obviously I'm from New York, for some reason it's sitting out there in US dollars. I think the real question for everyone here is what is going to be the future innovation? What is going to challenge that? Is it going to be central bank digital currencies? Will it be alternatives from SWIFT? Will you find a non-US dollar stablecoin? I can tell you we have a lot of interest coming in around bullion banking and gold-backed ones. I think this is a wide open space to figure out where this goes. So I'd encourage all of you to have this on your list of things to look at. So I'm going to switch gears and jump into how money's going to even get smarter and talk about agentic payments and what's going on there. But before I jump into agentic, I think it's important to kind of, again, take a step back. We have lived in the last 25 years in what I would describe as the attention economy, right? And the attention economy works this way. We search, we look for things, we find it, we go to the website, we make a purchase, and you can see that it goes all the way down. It goes all the way down from awareness at the top, down to payment and checkout at the bottom. We're leaving that economy and we're entering what I would call is the intent economy. If I want to purchase an iPhone, I can go out and I will be able to get an agent to say, make that purchase. But what happens? All of that awareness, the whole way that this system was built is about to break, and we need to build a new system to make it happen. We need to build a new system that's going to allow for delegation of that authority, for price discovery, for feature payment. Think about promotional financing, buy now, pay later. All those things that occur at the bottom of the funnel are going to now have to occur inside of the agents and be delegated to them. This is going to require a complete rethink of that. And by the way, what's even more fascinating is the internet itself is breaking, right? The equation of the internet in the attention economy was, I will let you search my website and scan through it with bots so that you can put up the information in a search engine. Why? So I can send the eyeball back to you. What happens when we're no longer sending eyeballs back to the retailers going forward? Now, all of a sudden, we're just delegating and saying, I want you to make this happen. Well, what's happening is there's a Cold War going on right now. Cloudflare has blocked many of the websites, the GPT engines, from being able to search the websites. On top of that, Amazon has famously now gone out and also blocked the GPT engines from searching all of their websites. Why? Because they don't know how the payment is going to be made. So what needs to be figured out here on agentic is who's going to control that new economy? How are payments going to flow in this model? Is it going to be through protocols? Will it be pay per crawl? How do you deal with micropayments going back and forth? Instead of the user paying, the agent has to pay. All of this needs to be figured out, right? So it's going to require us to rethink payments across the board. So if you look at a traditional payment network, which I've spent my life in, buyer all the way to seller, right? The first thing that's going to have to change is the nature of the buyer is going to change. The buyer is going to become an agent plus an orchestrator agent plus a payment agent are going to start to emerge inside of there. And then the question for the payments people in the room is, how do you support that? Well, everything's going to need to be rethought. You're going to need to rethink, what does it mean to be an issuer in that environment where you issue now to an agent? What does it mean to be an acquirer where the agent is now making the purchase? How do you verify that you're actually legitimate site on the other side of it? The risk and underwriting that we've always done. It is going to require a complete rethink of the network, and I'll get to that in a few minutes. It's going to require protocols to be brought forward on that. And most importantly, it's going to take all of the payment methods that were traditionally at the end of the funnel at the seller site, and it's going to ask you, and it's going to force you to bring all those forward into the payment flow going forward. So when you look at this, point number one, protocols, it's quite fascinating. When HTTP, the internet, the World Wide Web protocols, were first published back in 1991, there was a protocol published for payments, 402. It is not used. The original idea of the internet was to actually have payments go back and forth for the websites, but we moved to this attention economy where we got everything for free. So actually the protocol is out there underlying to make this happen. And what you have right now is you have a battle for protocols going on, right? You've got universal commerce, you've got agent protocol, you've got the networks building their own protocols. The question will be is which one of these is going to win and which way does it play out, right? And then what that has an implication for is it has an implication to the way you think about networks, right? So, if you think about Cielo and all the networks you've built, Cielo, Pix, whatever they may be, those networks have to be rethought. And this is a fascinating point. When you look at the history of payment networks out there, what has happened over time? They have gotten faster and cheaper all the way down as we've evolved through it, right? All the way down into now you have the tokenization side, which can be very cheap in the 10 basis point range on that front. And the question, I think, for all of you, and for those of you in the room that are in the network side, is what will be the agentic payment network out there? Will those protocols on the prior page ultimately become the network, and you'll be able to move money any way you want, right? Will a new network will emerge that follows this trend to its logical conclusion, which is instant, invisible, and free to move agentic money around? And then the big question will also be is how will micropayments be solved? By the way, just to give you an idea of what some people are thinking about, imagine now with tokenization that you hold the deposits, you can actually invent, believe it or not, a negative interchange network that can solve this problem. Because if you can hold the deposits, you can earn interest on that. So you could all of a sudden see this chart go completely this way and still be incredibly profitable. So just some food for thought as you think about where agentic is going and the implications specifically to payments as we go forward. So I'm going to switch gears here a little bit and talk about the battle for the balance sheet. As I mentioned before, I don't think the future is about fintechs. But when you look at the past, what you do see is the fintech ecosystem has been incredibly robust, right? And when you look at those, you can see the dark green ones that are on this page. They are all payments fintechs. When you look around the world, almost every major billion-dollar-plus company that has emerged attacked the payment system in one way or another. And there was a reason for that. Because when you looked at the profit pools that are in banking globally, what you find is the profit pools are incredibly rich on the payment and network side. In fact, in many ways, the return on equity in those sides of the businesses are off the charts in terms of historical banking profitability. So what you've had over the last 20 years, I would argue, is you've had fintechs that have emerged that have attacked banking and the payment system from inside of the banking system, right? And so let's look at that as you go forward. But when you look at where the real money is, it was on the top of that chart. The real money to attack in banking is not the payment. That's where the profitability is. The real money is in the balance sheet. And this is what the new players emerging are starting to realize, that the money is not in what the traditional players have done, which is on the bottom of this chart, which is the fintechs that have gone after all this fee-driven income from the bottom up and effectively attacked banking from inside of banking and became regulated entities. Instead, what we're seeing emerge is you're seeing people attack the balance sheet to go after the real scale and scope out there outside of banking. So you've seen this already. You've seen it on one time. You see it in the competition for loans in the banking world. So you see it in the form of private credit, asset-backed finance. To put this in perspective, there's a company called Figure in the US. They packaged up home mortgages, actually HELOCs for anybody who's really interested. And they packaged them up. And normally you would sell them out. You'd have to be a bank to sell them. No. What did they do? They packaged them up, they tokenized them, put them out in a blockchain, $1 billion, and just had people pick them up. They had institutional buyers buy them. So now you have $1 billion of mortgages sitting out here outside the banking system, trading 24/7, complete transparency that doesn't even exist in the banking world, right? It's a great example of attacking that. And then fintechs are obviously doing that too. On the other side, on the deposit side, what you're seeing is exactly what we talked about. You can look at stable coins as a form of payment, as we did before, but what's the real magic of stable coins? They are really deposits. One of the biggest worries right now in the banking system in the US is that stable coins will pull deposits out of the system into what are called narrow banks. Banks are effectively companies that look like banks, but don't actually lend, right? And again, $300 billion has already been pulled out and put into stable coins. And you have a whole host of other things, fintechs trying to emerge on the checking side. But by the way, if I were to tell you, I don't think any of this matters, what's on this page. Because I think this is the question that we see everyone asking in the boardroom, which is, what do I do when all of a sudden customers can come in and they can just simply ask a GPT engine to optimize my idle cash, my money, and move it around. Now, this has always been a dream of the fintechs out there, but it's been incredibly hard. But now that you have open banking, you have GPT engines, the ability to develop this very quickly, I can tell you this is not that far away. And we're seeing it already start to emerge in Europe because of the open banking capabilities out there. So who would not want to be the one to help customers optimize the value of their accounts, whether it be on the depository side or on the lending side? So what does this look like? So we're moving a little bit beyond payments in the competition side for the balance sheet. Here's what it could look like. Here's what it could look like for different countries in Latin America. If AI agents can come at that, if you can do that simple optimize my money, whether it be lending or whether it be depository side of it, and you can just get 10% out of the net interest margin on that front, you can see the pre-tax profit decline. So what we're seeing right now is we're seeing major banks look at this question and they're saying, should I go and do this myself? Should it be in my app? Should I go out and say, I'll help you optimize your money? And one side of it. The other side of it is they're starting to think about product innovations that tie together both the asset, liability, and you can think of it as ALCO for any of the bankers out there, asset plus liability at the customer level. And how can I build product sets that can basically be immune to this type of change? If I were to tell you one thing, this is probably the biggest opportunity and the biggest risk for the banking system out there. So I'm going to switch gears another time here and talk about agentic capacity and what we're seeing there, because I think this is beyond fascinating. And I love this quote from JP Morgan, right? So if you're out there and you're working on agentic, and you're going to hear all kinds of things. I'm not going to bore you with agentic. You heard that to death. I think this is what matters. What would you do if I gave you 10,000 more people at a marginal cost of 0 tomorrow? How would you rethink the business that you're in? How would you rethink what you're doing? That's the question I think all of us need to ask, right? And when you look at this, what is fascinating is we see banks globally taking two different paths when it comes to agentic. Path A, I would say, is the use case path. What use case can I lay out? Can I have a presentation I can give to my board? And can I say out, here's all the use cases you can do? The other path, which is the path that JP Morgan took, is fascinating because you can read it on this page, but their belief was actually something simpler. They said, you know what? This is 1980, and Excel has just been released, and we're not going to be able to do banking without it. So therefore, we need to enable all 250,000 people in our organization with this capability to leapfrog everybody else that is out there. And look, you don't have to be JP Morgan to do that. I think any one of you in this room can do that. But it is a philosophical question on agentic. Do you believe this is just another piece of technology that's going to drive some use cases? Or do you fundamentally believe it's going to rewire everything that you do out there? And people always ask me, what do you think is going to separate the winners and losers on the agentic side? Actually, I think it has absolutely nothing to do with technology itself, from what I've seen. I think it has everything to do with culture. And what we're seeing is absolutely fascinating. We're seeing that the banks or players that have a sense of curiosity tempered with execution, right, are the ones that are winning. But what does it mean to execute? What it means is you do not confuse collaboration with consensus. And hopefully these translate well. Collaboration means I want to get everyone's input on it. Consensus means I need everyone to agree. When it comes to this, you cannot have everyone agree, right? You have to make decisions to move and execute on these things. And when you do, the results are unbelievable on that front. So I'm going to switch gears one more time here and talk about kind of how this is changing the way people are working. And I want to give you an example of software development, right? Because this was fascinating. We're going to put this on stage publicly next week with our friends at MIT that we did the research with. And what's interesting is everyone's talked about AI delivery, you know, with Copilots and Claude and the others out there. And what you see is phase one, most people do assisted delivery. They use it and they have the AI engine help the person. Then what you see them move to what we call AI delegated delivery. And that means they build agents to go do testing and things like that. And by the way, those things are good. They can get you 10, 20, 30, 40, sometimes 50% productivity. But what we found that when you try to scale that across large enterprises, believe it or not, the timeframes don't go down, they actually go up. They actually go up. And so we asked the question, how do you rethink software development in the age of AI? And in many ways, I think what's going to happen is I think Agile is dead. And I think what you're looking at is what happened in Waterfall and bringing many of those techniques forward. We call it adaptive development. But the idea is to take all those personas that you had before and be able to move them into blueprint-oriented approaches, or what are called ontologies, and that those ontologies then can become systems that then can be modified and maintained going forward. So this isn't about vibe coding. And the reason why I give you this example as a detailed one for any of the programmers out there is because you have to rethink every single thing that you thought was true for the last several years when you can have 10,000 people working for you, right? And here's another great example of it, which is how do you move from serial thinking to parallel thinking? So all of us, myself included, I'm a master black belt, GE trained, hardened on how to do Six Sigma to the nth degree, have been trained in serializing things in process-oriented engineering. Remember re-engineering, all that stuff, process engineering. Why? Because we had a scarce number of people. Well, in a world where you can have an infinite number of people, why think about things in process? Take mortgages as an example. Instead of running a mortgage through a chain like this and waiting for it to go through every process, why not string that chain out like this, all across the board, and do everything in parallel? The minute the data comes in, have every single person in the process look at it, because they're free, right? You could do this. So all of a sudden, you need to move from this idea of serialized approaches that we built our entire world over in banking to parallelizing those concepts. So look, if you remember just one thing from everything I just went through here on all of this, I'd say just remember this, 10x. You have 10 times the capacity that you believe going forward. And that is the key to the future of payments, agentic, and where I believe all this is going. It is a world that is going to be unconstrained in our thinking and our capability. And it's only going to be limited by how much you're willing to break the thinking that has brought us to where we are now and rethink it in the age of agentic, in the age of digitized stablecoins, digital assets, and everything else that's out there. So with that in mind, thank you very much. I know I'm sitting between you and lunch, so I thought I'd end a little bit early. And obrigado.
Momentinho para foto. Thank you so much.
Thank you.
It was a pleasure having you here. Thank you.